You might want to stay cash today. What's going on, guys? It's Ricky with TechBit Solutions, and I'm sure I'm not the only one that's noticed this, but the markets have been just trading sideways, and it's been a pretty boring market if you've been trading it since the market has opened, right? I'm not talking about people that held positions and that either gapped up or gapped down. I'm talking about the way that the market's trading. A lot of consolidation, unclear direction, and again, if you look at the larger time frame, markets incredibly overbought. So is now a good time to buy when markets are trading sideways and we are this overextended? If you think that the risk is worth it, be my guest. But again, anytime that markets consolidate, they trade sideways and show signs of a possible slowdown or resistance, especially when they're this overbought. Again, all it takes is a nice break of support here on the 1 hour time frame. If we break that support at 550, wouldn't be much of a surprise if we then begin to see lower lows and lower highs and QQQ begin to retrace. We do not have that confirmation just yet, but all I'm saying is that, well, why would you go long on something that isn't showing signs of an uptrend, right? All it's doing is consolidating, especially when it's this overbought. If we do break that support, there's so much retracement potential. It would unfortunately put you in a pretty tough position. But again, that doesn't mean that you need to short. All it means is that if you stay cash right now and markets do retrace, you can at least buy it back at a much cheaper price. Invest or buy the dip again when deals are actually presenting themselves. And that's what it feels like, again, the markets are doing, because it's not just the NASDAQ market that's trading sideways, that's really hasn't shown much progress, but you even have Tesla, a lot of consolidation since the market has opened. And the thing that not enough people are talking about is that Tesla is set to report its deliveries on Wednesday. And this is a really big thing that, again, a lot of Tesla investors are really looking forward to see if Tesla's business, its fundamental business, its core business is actually growing, or if it's falling apart once again. So this is a really big focus for a lot of people, because if Tesla begins to show that it's still slowing down based off of recent news, then you can't be surprised if Tesla begins to downturn. But if these deliveries come in better than what was expected, Tesla has had a previous support range here right around 320, and we'll see if it begins to uptick. The other thing that I also want to bring to your attention is, this is just my 2 cents. Hood saw a huge gap up, but based off of good news that's being shared right now. Hood is incredibly bullish, but in my opinion, it's overbought for the day. This is just an intraday play. I see some retracement potential. This is a stock that I'm watching to potentially short because of how much downside risk there is, or downside potential there is when it comes down to shorting. 2 things I want you to know. Do not short this if you're a beginner. And second, this is not a blue chip company that is very consistent and not volatile, right? It's very volatile. It moves very quick, and just as quick as it runs up, it could also drop. So again, it's not meant for beginners. I just want to make sure that you have a full understanding of that. The thing that I also want to share with you when it comes down to this NASDAQ market is why things might be a little bit slower today. And supposedly Treasury Secretary Bessent says that he has seen no inflation from tariffs, and Fed Chair Powell's successor is coming in as soon as a few weeks from now. This, first off, for Treasury Secretary Bessent saying that there's no inflation from tariffs, everyone knows that inflation is a delayed response from anything, right? Not just these tariffs, but inflation does not just, if you increase the price or increase tariffs, they're not going to show up on next month's report. It's a delayed response. Inflation is always and has always been delayed. He knows this, but he knows that the general public does not understand this. So they want you guys to be like, oh yeah, you see, they are right. Tariffs are not inflationary. It's common sense. If you increase the price on the cost of goods from producers and manufacturers just to import them into this country, that increased price to some degree, right, is going to get passed down to the consumer. It just takes time. And we'll see in the months that follow, no question about it, that prices will begin to uptick in these series of sectors that have been affected by tariffs. And again, Jerome Pal has made this very clear, that it's always been a delayed response, and that's what the Federal Reserve has been waiting for. They are data dependent. They don't cut rates just because the President of the United States is asking them to do so. And this news just continues to be shared, and I want you to have an understanding of how wrong this is. Just in, it's official. Jerome Powell will be replaced in the next few weeks. Expect a huge pump. Crypto bros are trying to do anything and everything to drive more beginners, foolish beginners, naive beginners, to pump and jump into the market at these overbought levels, because they know this is not true. For those that do not know, Jerome Powell's term does not end until May of 2026. It's not just in a few weeks. And all of this is just to, if they were to be able to remove Jerome Powell, obviously Trump would assign someone that maybe is more willing to start cutting rates. Because if they do begin to cut rates, then yes, that would be bullish for the markets because it's cheaper for people to borrow money and therefore be able to not only invest into these markets, but also allow businesses to borrow at a cheaper rate. But we are not there yet. There is no expectation, and you guys can, be my guest and look into this yourself. There is no expectation for the Federal Reserve to cut rates anytime soon. You guys can look it up. It's the Fed Rate Monitor tool, and there is literally like a 95% probability that the Federal Reserve is going to pause once again. Just do not fall for these foolish headlines that say one thing, but of course are simply just trying to get a reaction out of you of buying at these overbought levels. Again, if you want to buy at what I view to be an overbought level, be my guest, right? There's nothing wrong with that as long as you are aware of the downside risk. And that's all we are trying to do is when we talk and highlight the downside risk because I believe markets are overbought, it's not to convince you that you shouldn't buy. It's just to make you aware of the risk. If you respect the risk and you acknowledge it and you still see the profit potential in markets going up to be that great, then do it. Right? That's the whole point of these free markets is that you get to decide where to put your money when you see it to be fit, right? When you see the opportunity presenting itself. But I would hate for you to jump into these markets thinking that all it can do is go up and not understanding or acknowledging the downside risk. So that is why, again, I always talk about both sides. Again, we do this every single morning with our LPP team during our live trading sessions. They got to see me short hood in real time this morning, and they get to watch me trade live every single day. If you're a beginner and you want to watch me trade live starting tomorrow, it's the second link in the description down below, and it literally breaks down to $1.35 per day with the current sale we have going on. Second link down below, and I'll see you tomorrow at Market Open for our live session. Take care, team.